Hello and welcome to BQ Prime. You're watching Trade Talks. A very good morning to all the viewers. I am Hiral. Clearly, if you go to see, we are just 1.6 points away from hitting live high levels in terms of Nifty 50, and that's what the street is waiting for. Whether we will manage to do that today or not is anyone's guess. But if you see cues that are coming in from SGX Nifty, that is indicating a slightly muted start, but somewhere around those levels of 18,800. Where from here on is something we need to wait and watch. But clearly, let's quickly look at the markets clearly. There has been volatility in yesterday's session, but that was mainly on the back of the weekly expiry that we've seen. And you have, the index actually seeing some bit of selling pressure within the opening hour. Overall, a 1.9 points away from the life high levels, as we already mentioned. And what analysts are saying is that this market is still a buy on dips market. So that's what you are seeing investors do, buying at lower levels and coming in at selling at higher levels, and that's what is creating the selling pressure. If you see in terms of the technical picture on Nifty, clearly there is support coming in at 10 DEMA, and that's trading at around 18,742. So watch out for those levels pretty closely, and there is strong support at 18,700 and 18,650. That's the zone we are looking at. If you see in terms of Bank Nifty, yet another day where we've seen that consolidation that has continued in terms of Bank Nifty. And clearly, even if it's managing to go above those 44,000 levels in intraday trading session, it's not really able to hold those. And if you see the support is coming in now at 43,350 to 43,500, so it's slightly lower than the previous trading sessions. Overall, in terms of resistance, 44,150 is the clear level that we are watching out for. Let's quickly look at the FNO data. Now, clearly, it's been a seesaw weekly expiry that we've seen for the markets in yesterday's session. The open interest addition, if you see in terms of the index futures, that's actually indicating a fresh short position. That's the build-up looking like. On the call side, the highest OI was observed at 18,800. And if you see on the put side, the highest OI was observed at, again, 18,800 itself. So that's the key level we are watching out for. On Bank Nifty, 44,000 is what we are looking at, and there is support coming in at 43,500. So that's the overall market picture. But let's quickly look at the sectors where the FIs have started to garner interest in the last fortnight, because that will give you indications of where the action is lying as well. Clearly, if the FIs have been positive for a fifth consecutive fortnight, and in the last 6 months, we've seen a total inflow of around $7.36 billion. Financial services as well as automobile and component, these two are the sectors which have seen the highest inflow, which is then followed by, if you talk about the material sector, that has reversed the sixth consecutive inflow trend, and that's a sector which actually saw an outflow. Capital goods has also been interesting, wherein after 2 years, it's actually seen an inflow of around $612 million. So this absolutely tells you which sectors you should be watching out for. But moving on, one sector that continues to remain in focus for a second consecutive session is the IT space. Yesterday, we had a lot of news flow that was coming in around there. And today as well, after Accenture has reported numbers, we have Tushar who joins us to get us more on it. Tushar, good morning.
Good morning, Hiral.
I mean, Accenture, that was in focus because, the IT sector was in focus yesterday because of the expectation. And now you already know what has happened. They've lowered the guidance. What are you picking up firstly?
So first of all, you started off by talking about how we are close to lifetime highs. If the IT pack has its way, that may not happen today. I'm so sorry. So anyway, coming to the Accenture results, Accenture has guided for a lower revenue growth in FY23 from 8 to 10% in FY23 earlier that was predicted to 8.9% now. If you look at the numbers, revenue is up 3% to $16.6 billion in the third quarter that ended on May 31st. Operating income is down 9%. Consulting revenue has shrank 1%. Consultant bookings is down 2%. What does that mean for Indian IT? Okay, Indian IT does not have a lot of exposure to consulting, but still there is some read-through. The three key takeaways, I'm so sorry, are there's sharp moderation in Accenture's outsourcing booking suggests a rising scrutiny on IT spends. Lower contract profitability points to higher competition for a smaller pie, which effectively means lower margins. A muted outlook for the North America market and as well as the communications vertical indicates pain for LTI Mindtree, LTI Mindtree, Tech Mahindra, HCL Tech, etc. So that is the read through that we are getting from Accenture's results from, that came out last night.
So overall, Tushar, what would actually mean for the Indian IT companies if you have to start correlating now?
If you start correlating right now, is the revenue guidance that has happened, that has been lowered. So that points to more pain for the Indian IT companies in Q1. Q1, we already knew that there was a washout, but this kind of a guidance, because Accenture's fiscal year ends on August 31st. That's almost 2 quarters. So we know that this is gone completely. We're also getting readings from brokerages that they're saying the rest of the year will also be a washout. So those commentaries plus Accenture results do not point a rosy picture for NIT in FY24.
Right. So with that, you have a lot of brokerages which have come up with notes on Accenture. What is their key takeaway from the results?
Their key takeaway is mostly to do with the fact that the outsourcing bookings. See, Accenture's consulting revenue has also gone down, but the outsourcing bookings have also come down, which effectively means a bit more pain for Indian IT companies because they're more involved in the services business. The North America market is not working. The Europe market is working, but North America being the biggest market for Indian IT companies, it means that if Accenture is seeing moderation in North America, the things can be worse for Indian IT there as well.
Right. So, overall, yes, that space is going to continue to remain in focus in today's session as well. Thank you, Tushar, so much for taking us through the details in terms of IT space. Yesterday's session as well, we didn't see any not much movement that came in from there. However, it was the broader markets that were in perspective. A lot of smaller names which actually saw bulks and blocks in the last couple of trading sessions. In fact, Sajid was with us to take us through what's the rationale for these kind of blocks and bulk deals happening. But Sajid, welcome to the show and very good morning. Sajid, we spoke about the bulk deals and block deals that are happening in this market recently. Now, on the back of this, your FTSE, which has started to do some readjustments as well. What is that looking like and what will it lead to?
So, we've been seeing a lot of block deals happening in the last a week, 10 days. And we've seen three major ones happening in Shriram Finance, HDFC, AMC, as well as Timken. If you look at FTSE has come out with some of the readjustment because some of the existing investors or long-term investors have sold stake in these companies, and as a result of which the liquidity has increased, and so the free float has increased, and that adjustment is reflecting in the inflows which may be coming in. Now, please remember that this block deals happened on the market and it's been now bought by some of the investors. So many of the investors or other investors are already invested in this, but it gives an opportunity tomorrow when there's a churn, so the liquidity increases for them. Shriram Finance is one where the incremental inflows are expected to that $19 million. That's roughly around 80 lakh or shares which we are talking about in terms of liquidity, and that impact will be nearly 0.6 on the daily volumes of the company. HDFC AMC, we are seeing nearly $16 million of incremental inflows coming in there. That's nearly 60 lakh shares of additional liquidity that's coming in, and that impact will be 0.4 on the daily volumes. Timken is 9 million, where one of the parent has sold some stake in the Indian arm. 20 lakh shares or is the liquidity which is coming in because of that, and roughly 0.3 is the impact on the daily volume. So the impacts are very minimal in nature, but it brings in more liquidity for future churn that happens in the stock.
Right. So I think all of these counters will be in focus as well. A lot more that could be on the radar from a block bulk deal perspective from here on. But apart from this, Sajid, we'll be looking at the OMC space also pretty closely on the back of the way crude has plunged in overnight trade. Paint companies will be in focus as well, because somewhere there'll be a sentimental positive. But anything else we should be watching out for today?
Yeah, so we've seen a gradual decline in crude, but many of the companies are sitting on high inventories, so the impact may happen only 2 or 3 quarters down the line, because of they're expecting crude gains to come in or reflect in the costs only later on. But if you look at some of the other other stocks to watch out for, the India USD throws up 2 key names. One is HAL, Hindustan Aeronautics. the deal with GE Aerospace for the new engines, which is 414 engines, is a path-breaking or landmark deal. And what it does is that it paves the way for the next generation of aircrafts to be produced in India. India already has Tejas LCA Mark 1 and Mark 2. Now they're looking at the fifth generation aircraft for which they need a better engine, and that engine would be prototyped and tested and verified in India with a technology transfer to HAL. That means that over a 10-year period, when the new aircraft comes into being, they will not only be produced in India, but they will have the potential to be exported going forward. So it gives you a long runway for HAL with respect to the aircraft capability and production going forward. They're looking at some of the existing engines also to be manufactured in India, roughly around 75 odd engines that will be manufactured in India, but that would also augment the HAL's capacity. But the deal is from that point of view. The second one is L&T. India has signed or gone and approved the master service agreement, which will allow US ships which are mid-voyage to be serviced in some of the Indian shipyards. L&T is one of the biggest beneficiary of that. Its Chennai facility, which is underutilized and where a lot of capital has been spent, can now be utilized for servicing of those US warships, which are mid-voyage in the Indian Ocean area. So that's going to be one. Euros, apart from the US India deal, we have other big ones coming in, which is Euros International. Now, this one has been in the works for many years. Lots of things written about it. The SEBI has finally come out with an ex parte order which could pass some of the promoters or managements from taking part in the company. I'm sure it's going to be contested, but for now, Sunil Arula, the managing director, has been barred from holding any key managerial positions. They've asked us stock exchanges to do forensic audit on 3 companies, which include Thinking Pictures, Media One Global, Spicy Entertainment, because SEBI finds that they've been conducive in alleged misrepresentation and diversion of funds. The other stock to focus out is BPCL. They're raising funds, which includes rights issue. BPCL is embarking on a capex plan, so that rights issue and fundraising would be key to watch over how much is going to do it. ONGC is consolidating its operations in the Panna oil fields, which is the offshore oil fields, and for now earlier it was using ships to transport the oil. Now it's set up pipelines that would save them nearly $43,000 a day. So that realization. So if you look at ONGC's offshore fields, the realizations have been falling, and this will help stem some of the fall in the realization because they're going to save some of the cost there. And finally, Tata Power is the one. They're selling off some of the offshore assets. They expect to get nearly 2,500 odd crores from sale of assets in Indonesia and Zambia.
Right. Thanks, Sajid, for getting us these counters. But a few more smaller names that we should be watching out for will be Ather as well. And this is on the 750 crore QIP that they have announced. The shares will have a face value of 10 with a premium of 926 rupees a share. So watch out for Ather Industries in trade today. Apart from that, in terms of where other names are concerned, Saregama, one of the smaller names. In fact, Saregama was seeing some bit of action last week, this week itself. And now the NCLT at Kolkata has approved the demerger of the e-commerce distribution business, and that's what the company has reported on exchanges. Orchid Pharma will also be in focus, and this is again on the back of a QIP, which has been launched at 425 rupees per share. And overall, the trading window will close on the 30th of June. So lots of movers and shakers in trade today from a sector specific though. IT, as we mentioned, will be in focus. The cement space, which actually saw selling pressure in yesterday's session, will probably see that continue in today's session as well on the back of the way the trends for raw material prices is changing. And very lastly, watch out for the sugar pack in trade today. Yesterday, a blockbuster up move that we saw wherein stocks did go as higher as 13 to 14% in intraday trade. In fact, we will be speaking to the management of Sri Renuka as well to give you a perspective of what's happening on the global sugar price trend, as well as in terms of interest subvention would mean for the sugar companies and where the ethanol blending program moves from here on. That's all that we have on this session of Trade Talk. In fact, lots more lined up on the other side, and we're just a couple of minutes away from Markets Open. Please stay tuned to BQ Prime.